Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com, or you can find the link to the website in the description below. Everyone these days loves to say that traditional retail is dead and e-commerce is taking over. But here's the thing. E-commerce makes up less than 1/5 of all retail sales. This means that over 80% of shopping still happens in physical stores. The fact is, retail isn't dying, it's evolving, and some of the companies are figuring out how to do it successfully. Not all retail will be equal, and some businesses could face dire consequences if they don't evolve. As evidence, investors should put Kohls Corp, traded on New York Stock Exchange under symbol KSS, on their investing radar. John?
Yeah, thanks, Mo. Yeah, and right now, it seems that investors have pretty much fallen out of love with KSS stock. They're pricing it like we're back in 2020, as if Kohls is on the verge of collapse. For example, if you take a look at Kohls' chart, you'll see it's fallen more than 70% over the last 3 years. KSS stock is also trading well below its 200-day moving average and 50-day moving average. This suggests that intermediate term and long-term trends are pointing downward, and investor sentiment is extremely bearish. Now, to add salt to the wound, investors are betting against KSS stock as well. As per the most recent data, more than 54% of the entire float that shares available for trading is actually short.
John, I have to ask, does this suggest KSS stock is a contrarian opportunity?
If you dig a little deeper, see the reality is very different. When expectations are this low, even small improvements can move a stock higher. So investors need to do a little due diligence, decide whether Kohls is a retail dinosaur or is a fallen angel opportunity in disguise.
And for some initial due diligence, what can you tell us about Kohls?
Wisconsin-based Kohls Corp operates as an omni-channel retailer in the U.S. through its website, mobile application, and more than 1,100 stores in 49 states. Kohls offers branded apparel, footwear, accessories, and beauty and home products. Kohls management realizes that there are big problems and is trying to tackle them. With the release of its third quarter 2024 financial results, Tom Kingsbury, the outgoing CEO, said that the company is not satisfied with its performance in 2024 and is taking aggressive action to reverse the sales decline.
And I think the key phrase to focus here is aggressive action to reverse the sales decline.
Yeah, and if you look at the company's financials, you can see that management is indeed working very hard to steer the company in the right direction. Kohls announced recently plans to shutter 27 underperforming U.S. stores, with operations winding down by the end of April at the latest. Over the last 3 quarters of 2024, selling, general, and administrative expenses were down 3.4% on an annual basis at $3.8 billion. If revenue slows down, expenses must be controlled very carefully, and Kohls is doing just that. Now, beyond this, Kohls generated $52 million from operations in the first 3 quarters of 2024. This is lower than the same period last year, but positive cash flow is a good sign. It tells us the business is bringing in enough money to pay for the company's day-to-day expenses.
If you like what you see so far, check out incomeinvestors.com. While you're there, you could also sign up for our free special report titled 3 Income Stocks to Own Today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. And now back to the video. And John, what kind of opportunity does KSS stock provide for income investors?
While shareholders wait for a turnaround at Kohls, they could generate decent income holding KSS stock. At the current price, KSS stock has a dividend yield of 16.93%. Paying 50 cents per share each quarter, or $2 on an annual basis. Now, as of this recording, KSS stock trading at around $11.80 per share, so a mere investment of $1,180 or 100 shares could generate annual income of $200. Now, it's important to note that Kohls is in a turnaround situation. This means that its financials could get better, which could ultimately be good for dividends. Now, prior to the company facing current hurdles, Kohls used to pay a quarterly dividend of 70 cents per share. If a similar dividend is reinstated, a shareholder could see a massive increase in income.
John, thank you so much for your insights. KSS stock has seen a massive downside over the last few quarters, but this retailer is trying to turn around, and in the meantime, those who own the stock could generate decent income. And if Kohls' turnaround is successful, the capital appreciation could be immense here as well. Something else also worth noting, since a massive amount of KSS stock float is shorted. This makes it a great contender for a short squeeze. If Kohls continues to improve its profitability and the news flow is positive in the coming quarters, it might be enough reasons for bearish investors to ditch their positions. And remember, the only way bearish investors can exit their position is by buying back the stock. This frenzy of buying could cause a big spike in KSS stock. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. And in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.